Morning, everyone. My name is Larry Walker. I'm State Senator from Georgia, and I chair the Georgia Senate Insurance and Labor Committee. So I have chaired a committee before, but I've never chaired a committee at NCOIL, so I hope you will give me grace this morning as I probably stumble through this. But I'm really proud to have NCOIL here in Georgia. As Georgia Senator, I can't tell you how important NCOIL has been to me as a resource and how much I've enjoyed the conferences over the years and getting to make new friends and all the networking. So real proud to have you all in Georgia, and hope you all have had a nice visit and will come back frequently and soon. There's no need for a roll call. The sign-up sheets will go around. We've got a lot of business on the agenda today, so we're going to, I'll ask for a waive of the quorum requirement. Have a motion. Do I have a second? All those, I have a motion and a second. All in favor signify by saying aye. Aye. Any opposed? Like sign. Motion carries. Next, I'll entertain a motion to approve the July 19th, 2025 and September 30th, 2025. Got a motion? Do I have a second? All those in favor? Opposed, like sign. Motion carries and the minutes are approved. All right, the first item on our agenda this morning is a presentation on the developments in the autonomous vehicle marketplace. I hope many of you have had a chance to test ride a Waymo. I know I certainly enjoyed it. And so we've got representatives here to talk to us about that. And I'll first call on Brad to give a little introduction and then let him hand it off to his partner.
Great. Thank you, Mr. Chairman, members of the committee, good morning. On behalf of Waymo, we were pleased to be able to offer some demo rides for you here in Atlanta, show the service that is live for consumers here in Atlanta. And we thought it would be helpful for you to give you an overview of Waymo's operations and the expansion, the future expansion of AVs as it starts to come into more markets, and you're likely to be addressing some issues in the legislature around that sometime in the future. So I'm going to turn it over to Ish here from Waymo to give you some more details on that.
Thank you, Brad, and thank you, everyone, for the opportunity to share more about Waymo. My name is Ish. I've been at the company for 4 years and very grateful for the opportunity to just share more and answer any questions as well. So happy to start talking about Waymo, which actually stands for A Way Forward in Mobility. Someone had a very fun time coming up with that name. But really, our mission is to, if this clicks, you'll see the slide. There we go. Our mission is to make the roads safer and more accessible by building what we call the world's most trusted driver. And the reason for that mission is that our roads have a problem. As you can see up here on the slide, every 26 seconds, someone loses their life on our roads. That's over 1.19 million people worldwide every single year, mostly due to human error. And in the United States, that's roughly 43,000 people every single year. To put that in perspective, a Boeing 737, which holds 180 people, it's essentially a Boeing 737 falling out of the sky every single weekday on the United States roads alone. So just a crazy number, and unfortunately, currently the status quo. Beyond safety, transportation also remains inaccessible to a lot of people, including people with disabilities and seniors who can no longer drive. And that motivated us to found Waymo over 16 years ago now, so in 2009, when we started actually as the Google Self-Driving Car Project. And the reason I mention that history is that I think a lot of people have only recently started to hear and see a lot about autonomous vehicles, but it's something that we've been working on for over a decade and a half. And since then, we've put our technology through what we called the world's longest driver's test, driving hundreds of millions of miles on public roads, billions of miles in simulation, which is very, very important to train for those edge case scenarios. And we've driven in over 15 states across the United States, meaning dozens of cities across the globe. And that has actually taken us to the point where, to Brad's point, we are now operating and serving over 250,000 paid rides weekly, every single week, in the top 5 cities listed here. So Phoenix, San Francisco, Los Angeles, and Austin and Atlanta in partnership with Uber. So again, grateful that many of you were able to test that here in Atlanta as part of the conference. In addition to that, though, we've already announced actually 10 additional markets that we have intentions of operating in a commercial service next year. So you can see up here on the screen, Miami, DC, Dallas, Denver, Seattle, Nashville, London, San Diego, Las Vegas, and Detroit. So many, many more cities coming soon. And I do want to take a second to clarify what we mean when we say fully autonomous driving. So unlike the left side of the screen here, driver assist technologies actually require you to take control during your journey versus Waymo being the driver always. So the automotive industry actually measures autonomy on this 5-point scale. And as you can see on the screen, at levels 1 through 3, a human must remain behind the wheel, always ready to intervene. And so we classify these as merely driver assist systems and not actually true autonomy. Waymo, on the other hand, operates here on the screen at level 4, which means true autonomy, where an empty vehicle can pick you up and transport you from door to door while you relax in the back seat or meditating, sleeping, or anything else. So the simplest way to understand it is that if you need a driver's license to operate it, it is not autonomous. And so we've provided over 10 million fully autonomous trips, transforming how people move through life. And what started as a technological wonder has become something even more valuable. It's a trusted, consistent experience that a lot of our riders now depend on day after day. But rather than take my word for it, happy to show you and let you hear directly from our riders.
What are we doing?
We're in our first ever Waymo.
And what does it mean when we're in a Waymo?
It means that there is nobody
driving this thing!
And this is a fully autonomous Waymo ride.
I cannot believe this. The car did a better job than if somebody was driving.
The truck was over the yellow line, so the Waymo braked and moved to the side.
It knew how to pronounce my name.
Oh my God, look at this.
Oh, it's nice. I love it. This is new.
This is so cool.
I'll never forget this. Never.
Perfect. So all of that magic that you just saw happens, of course, with a lot of hardware and software working behind the scenes. I think many of you have seen the vehicles and all of the sensors that are around it, but did want to just briefly chat through it. So our 5th generation Waymo driver, which is the system that makes up our fleet today, uses a combination of 29 cameras, 5 LiDAR sensors, and 6 radar panels that work together to build a complete view of our surroundings, day or night, rain or shine, 360 degrees up to 3 football fields away. So just an incredible amount of perception. And with this comprehensive sensing capability, our AI-enabled software serves as the brain behind the Waymo driver. It simultaneously processes what's happening around the vehicle, anticipates what might happen next, and makes safe, confident decisions to navigate complex environments. Of course, always happening in the blink of an eye. And so let's see how this comes together. So on the next slide, I will show you actual footage from the Waymo driver of a trip that we took in Austin, where a scooter user unexpectedly entered the road. I might try to play it one more time just in case people didn't catch it. So you can see essentially how the Waymo driver's perception system immediately detected the scooter user, anticipated the next potential action and the probability of it happening, and then we made a very split-second decision to safely maneuver around them, all at the same time as looking at the vehicles around us, making sure no one was in the left, behind us, everything like that. And of course, it's very striking to see it presented this way, where other people have commented that perhaps a human driver may not have been able to avoid that. So this is just one of the countless complex scenarios that our vehicles navigate every single day. And the reason that that is the case is that since we drive millions of fully autonomous miles every single week, which is multiple human lifetimes of driving every single week, we encounter those rare events actually pretty frequently. And every single one of those interactions actually helps make the Waymo driver even better through continuous learning, improving road safety for those who choose to ride with us, and actually all the others that we share the street with. So we've seen a lot of these cases. We have prevented a lot of red light runners from hitting us. You can see images here just showing countless examples of the Waymo driver navigating a lot of crazy real world situations. And so safety really is at the core of everything we do at Waymo. So that's actually the reason that the thing we're most proud of out of all of that operating experience and everything I've shown you thus far is that the data shows that we are already making roads safer, meaning we're reducing injuries and fatalities in those areas in which we operate. And so this slide here is showing a study of over 96 million fully autonomous miles driven in the cities that we serve, where the Waymo driver has proven to be safer than an average human driver across a range of metrics that you see here on the screen. And these are percentages, but the other way to look at it is that these numbers translate to 11 times fewer serious injury crashes, 5 times fewer crashes with airbag deployment, and 5 times fewer injury-causing crashes. And before you ask, essentially all of the crashes that we are involved with are things like people rear-ending us or hitting us where it's not actually the Waymo driver initiating. And so the other thing that we're most proud of as it relates to safety here, as you're seeing, is that we do regularly publish insights into our safety performance and our validation methods to empower communities with a deeper understanding of our safety record and to actually serve as a guide to others in the industry. So all of this data, plus much, much more, is available at waymo.com/safety. And that essentially has allowed a lot of academics and researchers to reconstruct these safety data, to see every single incident that we've reported in these over 100 million fully autonomous miles driven, and really get a true sense of our safety record. And beyond internal safety data, here on the next slide, I wanted to share this other compelling set of data that I know may speak a little bit more directly to this room. So we actually partnered with Swiss Re because we wanted to move beyond the engineering metrics and actually evaluate Waymo from the perspective of cold actuarial science. So effectively, we asked a global reinsurer to provide their independent risk assessment of our technology based on actual payouts. And so the previous slide showed all contact events regardless of fault. And this study here instead focuses specifically on liability, responsibility calibrated benchmark. So we looked for any claim where any adjuster assigned any level of responsibility, even just 1% to the Waymo driver. So even if we were partially at fault, it counted against us. And as you can see in the stats here, Swiss Re compared our data against a massive baseline of over 500,000 human claims, and the results show a fundamental shift in risk. So for property damage, on the left, the first metrics on the left for each section, we saw 7 to 9x reduction in claims compared to humans. And for bodily injury, we saw a 10 to 12 times reduction. So to put that in concrete numbers, over the 25 million miles analyzed, a standard human fleet would be expected to generate 26 bodily injury claims, and the Waymo driver generated 2, which of course is a transformative reduction in severity and frequency. In the interest of time, I will skip the next slide and actually wrap it there, just sort of saying Waymo is real. As we like to say, we're already living the future, as many of you have been able to take it here in Atlanta, and we're excited to be bringing this technology to more and more people in more and more places. So thanks very much for the time. Happy to take any questions.
Thank you, Ish. Good presentation. And again, Brad and Ish, and Waymo, thank you for giving us an opportunity to experience these ourselves for the NCOIL meeting. Now I want to open it up for any questions from legislators. And how am I supposed to, I can't read.
I'll try and help you. So, Grossberg.
All right, Representative Grossberger.
Thank you. I had the good fortune of getting to ride in one of these yesterday, and it was the experience of a lifetime. And if anyone hasn't done it, you really missed out, and I encourage you to take that next opportunity. My biggest complaint is that Louisville, the city I'm from, was not on the list of the next generation of cities. You give really compelling testimony as to the reduction in the frequency and the severity of accidents, but I'm curious, what is the process or procedure that takes place in an accident? We all know what happens if you have humans driving the car, is you pull over safely if possible, you call the police, you exchange information. If I'm taking a Waymo, I'm not responsible for the Waymo. Does someone show up? Does someone get on a speaker in the car? What happens with the car, with the accident, with the report? What happens if I have an injury? You get where I'm going with it. So.
Absolutely, and very happy to speak to that, and appreciate the opportunity just to sort of explain too, beyond, of course, developing the technology itself, there, of course, are all these operational aspects. Beyond just developing the driver, we have to think about what it takes to run, maintain the fleet, deal with these kinds of issues. And so, to directly answer your question, let's assume that we were rear-ended and had to navigate that situation. So what we would do is actually very similar to what you or I would do as a human driver. We would pull over automatically. It's programmed to do that. And if authorities are not already on the scene or not around or not very shortly on the scene, our rider support team will actually be notified, and they will call the authorities. And we will at the same time actually dispatch one of our roadside assistance fleets. So in any of the areas in which we operate, we maintain a large presence for infrastructure like charging and repairing the vehicles, as well as a ground operations team. So at the same time, we will send one of our roadside assistance teams to the scene, but we'll let the authorities lead. And the interaction with the authorities actually on the ground will take place such that the rider, as you're describing, does not need to be responsible for engaging. So if we do have passengers in the vehicle, we'll pull over, the windows will roll down, rider support will actually speak with law enforcement over the intercom and be able to exchange any information necessary there. So of course, all these things we've had to think through in the scale of our operations. And it also, I'd also like to share in the same vein that we consider that partnership with local law enforcement. We're very proud of the partnership that we have. So we've actually trained over 20,000 first responders in all the markets in which we operate, many, many more as we continue to scale, to educate them on how to actually engage with these vehicles. There's also a special first responder hotline that any first responder can call. There's a QR code on the vehicle that they can scan if they don't remember the hotline. So I've thought through a lot of different steps in order to make that process as seamless as possible.
Real quick, follow up,
A slightly different question, which
well,
is...
if it's a different question, I'm going to go to Senator Utke.
Thank you, Mr. Chair. And my question was, as we see the cities and it's newer and it's fully expected that that's where the most rides are, but can these cars currently go out into the rural freeways, and how does it handle that? I mean, if somebody needed a ride an hour out of town, are you doing that at this point?
Very much appreciate the question. And freeways, if for folks who know the space, is of course very high speed and relatively high risk. So it's something that we worked on for many, many years before actually opening it to members of the public just this past week. So up until very recently, we were only doing surface streets, but actually did just open freeways after feeling very confident about our capabilities on freeways. And as you're pointing out, we're still focused on dense urban environments at the moment, but maybe the closest example to what you're saying is the San Francisco Bay Area, where it is hundreds of square miles essentially between San Francisco and Silicon Valley cities and everything in between, navigating on freeways. So of course, able to handle that very well, able to handle the people speeding, the people not, and everything crazy that happens on freeways.
All right, Representative Lilly.
Thank you, Representative Lilly from Illinois. Over here.
Good to see you again.
Yes, I enjoyed the ride as well. The legislation that was passed in all the other states. Can you give me a little bit of what's in that? And then was there any opposition? If so, what, as you proceeded down that road?
Yeah, I appreciate the question. And context for everyone else, over half the country, meaning over 25 states, have legislation on the books that allows for a commercial autonomous vehicle service to operate, and many more are since considering it. We're fielding a lot of questions from other states that don't yet have it, but are interested in it. So I'd say that the main provisions of the bill are things that are new to autonomous vehicles, but to establish a baseline. So a good example is defining actually what an L4 autonomous system is, meaning the fully autonomous system that I showed on the scale versus more a driver assist technology. So there are a lot of definitions to clarify what a fully autonomous system is, which is very helpful so consumers and legislators have a clear sense of what that actually means. There are other things like including law enforcement interaction plans, which we're also very proud to have done and been the first to do. So laying out all the steps to operate a fully autonomous service, especially for things that are different than standard human drivers.
And any opposition? And if so, what?
Yeah, I would say it's more of, I think, folks being unaware and wanting to learn more. And so it's, I'd say, less direct opposition and more of having to better understand the technology, which of course is completely understandable. It's a brand new technology and it takes a lot of time to get used to. So of course people are always curious or perhaps hesitant at new technologies, which is why we take our job so seriously, going across the country, answering questions, and really trying to educate. But it's a reason that half the country already has legislation on the books, where I think people have recognized the importance to start embracing this technology.
Thank you.
All right, Representative Pollock.
Thank you, Mr. Chair. Just a real quick comment. Really enjoyed you being here. Obviously, my favorite part is I don't think there's any tipping. Is that correct?
That is correct. That is correct.
Good deal. Last comment, and this is a promotion, but we really look forward to having you in the bourbon capital of the world next spring at NCOIL conference, because we could really use your services there as well. Thank you.
I will take that back to the team. Thank you.
For the record, I will take tips if you're willing to give them.
Representative Wilson, and then we'll come back.
Sorry, just a quick question. What does it cost compared to an Uber?
Very comparable to any other ride-hailing service. But no tipping. But no tipping, that's right.
All right, and sorry, Representative Miles. We're gonna do Representative Miles.
And then Representative Carter.
Then we'll come back to your follow-up or your other question, and then we'll do this one, and then we're gonna go on to the next subject. And I'm sure that Ish will be available to answer further questions.
Happy to.
We got some model legislation we got to get to work on, so thank you. All right, where are we at? Representative Miles?
Yes.
Good morning, and thank you for being here. I did take the Waymo ride, the demo ride, and I have to say I felt entirely safe. It did exactly as you said. It stopped for a person walking across the road unexpectedly. It stopped for a bus who had its stop sign out. And so what I'm most excited for, and you alluded to it in your presentation, is the opportunity for people with disabilities to have an opportunity at freedom and independence that they probably have never had. And so I look forward to the day when there's a Waymo dealership in New Hampshire.
Greatly appreciate that comment, and I'll just quickly go to this slide just to point out for the group.
And thank you for bringing my phone back, even though it told me, take your phone and your keys.
Always happy to. And I'll just briefly speak to this slide. And to your point, another thing we're very, very proud of is, again, the independence that this could bring to people with disabilities. And we've developed a lot of features, actually, with our Waymo Accessibility Network, consisting of a lot of those advocacy organizations as partners, to make this experience that much better. Things like screen reader support, the option to minimize walking time at pickup and drop off, things like having your vehicle, instead of honk, to find it if you're hard of vision, actually have a chime instead, which is much more helpful in a busy area where there are a lot of other vehicles honking. So very top of mind for us, and we've been so proud to see so much support from those kinds of communities for autonomous vehicles.
All right, we have several more questions-ish, so keep your answers.
Will do.
Representative Wilson.
No? Okay.
Representative Carter.
Thank you, Mr. Chair. Senator Aki and I were wondering, do your vehicles brake for bear and deer?
We do. Again, keeping the answer quick, we do. We have, you'd be amazed to see all the identifiers that we have for, of course, all the things you would expect: children, dogs, pets, cats, geese, birds, soccer balls, anything and everything.
Okay, Senator Lang.
Thank you, Mr. Chairman. I appreciate that. This is NCOIL. What's this going to do to the insurance industry, especially as it pertains to PNC for automobiles? And for the record, I believe your untested, unproven technology from 10 years ago was probably safer than getting into the car with my beautiful wife. But my assumption is this is going to this is going to really eliminate the need for consumer PNC. My assumption is if there's an accident, Waymo would be responsible, and you guys would have an insurance. And my guess is based on what I believe is the safety of your car, it's going to be a much lower premium than exists today. Just your thoughts on how it's going to impact our industry.
Yeah, that's one of the reasons that we want to engage here with the policymakers and with other stakeholders so deeply embedded in the insurance industry. You're right, when we look at this from the perspective of a fleet and fleet utilization, I think you're thinking along the right lines there. We'd also like to expand the discussion to a future where there's individual ownership of these vehicles, and how does the insurance marketplace adapt to that? How does it respond? And I think there's a lot to talk about that there. I don't think we're ready to have that conversation today, but we want to start marching down that road.
All right, we're going to close it out with Representative Grossberg with his second question.
Thank you again. We all received this article from the New York Times about Uber's festering sexual assault problem. Can you speak to, there's not enough detail in this because all the records are sealed, but.
All right, Representative Grossberg, that's off topic, so we're going to close it out. Thank you all very, very much, and we will be sure you share your contact information-ish, so thank you very much. All right, the next item on the agenda is a discussion of a potential consideration of a resolution encouraging states to require insurers to provide at least 60 days advance notice when non-renewing a policy. You'll find the resolution on page 233 of your binders, and it's also available on the website and on the app. If you recall, we have been working on an aerial image model that we haven't finalized or passed yet, but during the discussion of the aerial image model, there was some side discussion about the non-renewal notice for policies. And so several members of NCOIL felt like it would be an important topic to discuss and to pass a resolution, which I helped author or sponsor, to encourage states to look at their non-renewal timelines, especially in the environment we're in with many of us seeing a real hard market for property and casualty. And so in Georgia, we have seen this to be a particularly problematic on homeowners insurance, and the 30-day notice for homeowners insurance, and it's by mail, so the carriers are required to send the notice by mail, and of course we remember, at least in Georgia, how slow the mail can be sometimes. It's gotten a little bit better lately, but it was not unusual for it'd take 2 weeks to get a first-class letter in Georgia. So you're not giving the policyholder hardly any time to respond, to find replacement coverage, to maybe address the issue that is causing the non-renewal. And so in Georgia, I authored and passed Senate Bill 35 to extend the non-renewal notice requirement to 60 days, and that's on homeowners policies, is the way we did it in Georgia. Obviously, we're not trying to restrict insurers from making underwriting decisions if they want to, deny offering a quote or deny writing a policy on the front end. This is only on non-renewals after they are already on the risk. And in Georgia, we have a window of time after a company initially writes a policy for them to cancel it for any reason, any underwriting reason. So there are protections there built into our system, at least in Georgia, for the carriers. So if they insure a home and they then do an inspection and discover that it's a unfenced swimming pool, or there's a vicious dog, or there's a trampoline that wasn't disclosed, the carriers can cancel it immediately, I believe with a 10-day notice. There, Wes, you may know better than me, but anyhow, but this is on non-renewals is the subject matter. So I'm very happy we have folks to speak to this today. So first, we're going to introduce Paul Martin of NAMIC, and Paul, the floor is yours.
Chair and members, Paul Martin, thank you so much for the opportunity to speak briefly on this morning. First and foremost, thank you for doing this via resolution. The resolution process, we think, particularly on these matters where this is not necessarily a matter of first impression, but at times there are matters of somewhat first impression coming to NCOIL. So the resolution process is a great way to go about doing this. The one thing that, a couple things have jumped out at us that we just want to share for your consideration. Companies need to be given ample time if you pass one of these extensions for non-renewal so that they can do the necessarily computer programming to bring them to fruition. One of the concerns that has been raised is the scope of the resolution, I believe, is, as written, pertains to P&C. We think this really should be limited to homeowners, particularly homeowners if you have a 12-month policy. Having this apply to a 6-month auto policy can be really problematic. So I gather that the intent, based on comments I've heard, was to limit this just to homeowners. And finally, in the penultimate paragraph, I didn't know the meaning of the word penultimate until a professor in law school asked me, can you look at the penultimate section of that statute? And I just looked at him with my Tennessee public school education and said, I'm sorry, I don't know what that word means. So I got a really embarrassing lesson on what penultimate means, next to last, in case you were like me and not familiar with that term. There is a provision in the resolution that says that the non-renewal notice requirement should also apply to offering renewal with reduction in policy limits or coverage. We can come up with a number of examples where you could have a situation where you have a reduction in coverage. Maybe a policyholder elects voluntarily to take a higher deductible or elects to have an endorsement on their policy removed because they no longer need it. Those are reductions in coverage. I don't think you mean for this to trigger a 60-day notice requirement for that to take effect, particularly for things like that. So those are just some of the things we wanted to bring to your attention. Appreciate the opportunity to talk to you about it today.
All right. Good points, Paul. Again, this is a resolution encouraging states to look at their non-renewal statute, and it does not prescribe exactly what they would do after looking at that, but thank you very much. All right, next we have Wes with the Big I, and the floor is yours, Wes.
Thank you, Mr. Chairman, and thank you, members of the committee. And Mr. Chairman, thank you very much for the hospitality that you and your colleagues have provided over the last few days. It's been a great meeting. The Big I supports the resolution. We appreciate you and the other 4 or 5 co-sponsors that are associated with it. What we're seeing is that states are increasingly moving across the country to establishing a more reasonable 60-day window for non-renewal notices. Frankly, Mr. Chairman, for all the reasons that you explained, the 30-day window, especially in the homeowners market, right now is simply too short. It's a challenge for both consumers and their agents. And we want to avoid a situation where people have gaps in coverage or are forced to go to a residual market because there's not appropriate time to find replacement coverage. There are numerous states across the political spectrum that already have 60-day notice periods. Minnesota's one, South Carolina's another. There are states that even have longer time frames, like Kentucky and Florida. With these bills, when they come up, they are incredibly straightforward and succinct. I mean, they are stunningly non-controversial. What we see, every state's got a non-renewal notice statute, and it might say 30 days. So a bill of this nature simply strikes out 30, underlines 60 in its place. We're not changing anything else, any other requirements in that process. There's no other effects or unintended consequences as a result. And so these bills have been non-controversial where they've come up. Recently, Colorado went from a 30 to 60-day time frame. Mr. Chairman, you were a little bit modest in talking about your bill that passed this year. There wasn't a single dissenting vote associated with that bill in either chamber. And maybe that's because it had a good sponsor in both the Senate and the House. I'll leave it for others to make that determination. But I'll say you were not alone in that regard. In the last couple of years, Iowa and Louisiana and Texas have all addressed this issue in the same way, going from 30 to 60 days. In all of those cases, there was not a single dissenting no vote in either chamber. I think that kind of speaks to the point that we're talking about a fairly low-hanging, non-controversial issue that's a little bit different than some of the topics you've talked about in recent days. So we appreciate you have a lot of high-profile, complex, controversial issues on your docket, but nevertheless, we thank you for considering this resolution and drawing attention to the topic. We urge you to support it and vote it out today. Thank you.
Thank you, Wes. All right, next we have Paul, let's see. No, excuse me, Joel Lautcher of United Policyholders. I apologize, Joel. Go
That's
ahead.
quite all right. I have trouble pronouncing it myself. So I am here, as you mentioned, representing the insurance consumer-focused nonprofit, United Policyholders. UP has been helping insurance consumers all over the United States who are dealing the non-renewal notices from their insurance companies and who are now scrambling to find replacement coverage in a market that is extremely limited, and in some situations where replacement coverage is pretty much non-existent with an admitted carrier. So once the shock of that non-renewal subsides, policyholders really must rush to contact their agents to see if a reversal is possible or to search for replacement coverage. In our efforts, we're communicating on a regular basis with many agents and brokers. They're struggling to get quotes for their clients in this very restrictive market. And since most agents represent only a small number of insurers, the policyholder really has it's necessary to go out and find multiple agents to thoroughly search that market for them. So you just can't go back to the same agent you might have had and hope that's enough. We have about 80 very viable homeowners insurers in California, but any one agent typically represents 3 or 4. So that just tells you how much work you're gonna have to do to search the market. So, as noted, many insurers are also scrambling to retain their existing coverage if at all possible. Often, they need to get a roofing contractor or an electrician or a plumber who can do the work necessary for the consumer to comply with the insurer's renewal requirements. But qualified contractors aren't available to, do the work today. It may be some time out, and then they need some time to complete the work and for you to communicate that to the insurer. So you need to have a time frame that recognizes, that it takes a while to get a roof done, for example. So running out of time to find that replacement coverage, many homeowners concede coverage to their state's residual market, right? A fair plan type situation, and causing those markets to swell. Shopping the current market just takes more time than it ever did We don't want people to end up in a residual market if they don't have to. And so it's very important to give more time. Now, we appreciate that insurers don't want new laws or revisions to existing laws that would further restrict their business. That's why the insurance industry has a number of lobbyists that represent them, perhaps a few here today, working to impose any legislation that would strengthen or impose new requirements on insurance transactions. But I will say this one just makes sense because it doesn't make sense to throw away so many policyholders who are willing to do whatever is necessary to mitigate the risk and qualify for the renewal, if they just get a little more time to get that work done. And it also makes sense to give policyholders a little more time to shop the market in this very challenging market that we are experiencing pretty much nationwide today. So we at United Policyholders believe this particular Model Act will greatly benefit insurance consumers in every state while imposing a very minimal burden on insurers. In fact, this legislation would arguably benefit consumers and insurers alike. I hope we all agree that it is critical that consumer protections keep pace with market realities, as well as with insurers' technological innovations in underwriting and rating. We are not asking insurers to amend their underwriting restrictions. Insureds will still only be renewed if they come into compliance with the insurer's standards. So this is really a win-win for everybody. I think we all see plenty of insurance advertising on TV. Insurers spend millions of dollars to acquire new customers. Why throw away customers you already have who are willing to do whatever it takes to retain their coverage? So that's really a win-win for both sides. So I thank you for your consideration.
Thank you, Joel. The sponsors of the resolution are myself, Representative Matt Lehman, Representative Edmund Jordan. So Representative Lehman is from Indiana, Representative Jordan's from Louisiana, Representative LaBeef, I think is how you pronounce it, Massachusetts, or is that right? Yeah, LaBeouf, sorry. And Representative Brian Lampton from Ohio. So if the sponsors would like to make a comment, and I'll first call on Representative Lehman.
Thank you, Mr. Chairman. Paul, I agree with you on the 6 month. That can be a potential problem. My question is more on, you want to limit it to homeowner. I'm seeing more of an issue on the commercial side. Part of that reason is we're seeing more and more commercial carriers go to inspections before they'll bind coverage. So if I have a situation where I'm losing a client due to a non-renewal and a carrier tells me we'll get out there and inspect it in 2 months, because you guys are busy, how do I handle that?
Yeah, I was just looking at my notes here, Representative Lehman. You know, candidly, I didn't get a lot of feedback on the commercial side. However, I think generally we've treated, understandably so, commercial different than personal lines. Usually commercial folks, that's a more sophisticated client. If there are challenges with inspections, I think that's a conversation you need to have on a case-by-case basis with the company itself. I'm not hearing anything to refute what you're saying, but I will tell you that as a general rule, I think we've always erred on the side of, if you're going to make a concession here on timing and things like this, that we start with personal lines and then we examine later on if there's sufficient concern to move to commercial lines as well.
And I appreciate that. I guess I would say as states go back now from here and say, I'm going to use this resolution as a reason to maybe go back and look at my laws. If we focus solely on homeowner, I think we're going to be back here with another issue. Not here. I think it's going to have to be brought up at your state. So I'm telling the other members here, don't ignore the fact that there's other aspects of this that deal with problematic things in the current underwriting world of insurance.
May I comment? I would just say that I totally agree with what you're saying, and I would say in any property where there are higher limits, it becomes even more challenging. So it's not only businesses, but condominium associations, all types of property coverage are having issues finding renewal coverage. Thank you.
Representative Lehman, anything else on the resolution since you're a sponsor? All right, Representative Jordan, are you here, and do you?
Right here.
Yes, sir.
Over here.
Where? Okay.
Right here.
What would you like to add?
So look, I want to echo everything that Representative Lehman said, and just say that in Louisiana, of course, I know most of you are aware, we just recently updated ours to 60 days as well. But I would tell you that I always think that more time is better, especially for states that are coastal and hurricane-prone areas, because we have a period usually during hurricane season where nobody's writing new policies. And so it artificially sends people to our citizens market, because if it's anywhere between August and November, you're not getting a new policy. Nobody's going to underwrite that when they don't know if any storm is going to happen in the next 2 or 3 months. So I say that just to say that more time is always better. But if you're in one of those coastal states where you can become a victim to a hurricane, certainly keep those considerations in mind. So I do support the resolution. Thank you.
Thank you. Representative LaBeouf. Any comments?
Thank you, Mr. Chairman. I won't ask you to spell it because it's harder to spell than even to pronounce. But no, I just want to echo my colleagues' comments that they just said, and reemphasize exactly what you said, Mr. Chair, that this is a resolution, and individual states can adopt it and modify it as they see fit. And I do kind of dovetailing off of what Representative Jordan said, especially for those states where we're starting to see a larger share of policies go into our FAIR plans, having that more time for the consumer to shop and to be able to look at the specific requirements, I think is absolutely necessary. So I do support the resolution.
Okay. All right. Is Representative Lampton still here with us?
There he is, right down here.
Yeah, and you're a sponsor.
Thank you, Mr. Chair. One of the questions we're gonna look at it in Ohio. One of the questions as an agent I have are to the companies are there scenarios where you would say, well, 60 days is problematic? Specific examples. If there are, could you highlight those for me? If you don't have them now, maybe bring them to me so we can maybe consider a carve out, if you will, or something that would, we don't want to hamstring the industry, but at the same time, as an agent, 60 days is much, much better than 30 for us to be able to navigate a non-renewal notice to try to find the customer, adequate replacement coverage. Thank you.
Sure, I'll try. One of the benefits of these resolutions is sometimes it prompts us, not just the trades, but also the member companies to examine this and to identify those, one-off situations where a 60-day window might be problematic as opposed to 30. One thing I'll draw to your attention now, and it's somewhat unique to the NAMIC membership, is that yes, we have 6 of the 10 largest writers in the country, but we represent a lot of really small monostate, sometimes companies who only write in a handful of counties. A 30-day, so the concern you have in those situations is it is really easy for those companies to inadvertently get overexposed in a particular area. So sometimes they need less time, less non-renewal notice time in order to adjust their books for all the inflation, the weather situations, the conditions that we've talked about multiple times here over the last few meetings. So I could foresee, Representative Lampton, a situation where the smaller companies, particularly those in monostates or less than a state, would say, we probably need the flexibility of having a shorter renewal period. That's one example that comes to mind pretty quickly.
All right, I'm going to recognize Representative Wharton.
I think this, I appreciate this. My paying job is an insurance agency owner, and this is an issue that we have happen to us all the time. That we do not have enough time for our customers to make the repairs. Luckily, I have 8 to 10 companies, but I'm 100 miles north of the coast, and we still have an issue because we're in the national forest area, and they tend to say there's too much tree coverage and brush coverage, and so now we have the fire exposure. And it's an issue on the commercial and personal homeowners side. So I support this fully because I see it happen every day in my agency.
Representative Wharton, would you like to be added as a sponsor of the resolution? All right. And Representative, we'll do that, Representative Wharton. Representative Pollock.
Thank you, Mr. Chair. I'm also my real job is an insurance agent. And so I think it's very important, again, you mentioned it, Mr. Chair, this is a resolution. And obviously, we've got a lot of states here that has the 30-day language. In Kentucky, we've got the 75-day, I think, in our language. So 60 is pretty much fair. I think it's also important, too, and again, Paul, I take into account the mono companies type of situations, but if there's transparency with your agent and your insureds, you should be able in that time frame. So, Mr. Chairman, I am not a sponsor, but I would to be put on record that I would love at the appropriate time to make the motion to pass this resolution.
That's music to my ears, Representative, and I would, as chair, I'll say it's the appropriate time. So, all right. Second, who seconded it? All right, any further discussion? All in favor, signify, in passing the motion, signify by saying aye.
Aye.
Any opposed? All right, the resolution passes. Thank you very much, and thank you to our speakers. So it is, NCOIL can pass some stuff.
Without our
That was awesome. Thank you. Okay, now we're, item 4 on my list here is the readoption of model laws. And as a reminder, these models were discussed at the Chicago meeting in July and were carried forward for additional consideration today, and we're going to handle them separately. The first model we're going to discuss are amendments to the Model Act to regulate insurance requirements for transportation network companies and transportation network drivers. This model is in your binder on page 235. We won't be taking any action on the amendments today as they are still under development. The sponsor of the amendments, Mississippi Senator Walter Michel, had to leave the conference early, but with us here today are some interested parties who will provide their thoughts on the possible amendments. The first is Megan Serjane Samples with Lyft. Hey, Megan, I know you. And then after that, we're going to have Dan Hinkle with American Association of Justice, and then Kara Phillips. Who are you with, Kara?
I'm with the law firm of Dighton Rogers.
Okay. And then Brad Nail representing Uber. So, Megan, the floor is yours.
Thank you, Senator. Thank you, Chair, members of the committee. Thank you for the opportunity to provide testimony and begin the conversation on the importance of modernizing the liability and insurance framework governing rideshare network companies and the independent drivers who use their platforms. For those I haven't had the opportunity to meet, I'm Megan Serjane Samples, Director of Public Policy for Lyft. Rideshare companies have transformed how people move within and between communities, offering flexible earning opportunities for drivers and affordable, reliable transportation for riders. Yet, the insurance and liability standards that apply to this sector were largely established more than a decade ago, when rideshare industry was in its infancy and little claims data existed. Those outdated requirements now impose disproportionately high costs on riders and drivers alike without delivering commensurate benefits to consumers or claimants. Today, rideshare companies maintain robust auto liability coverage, typically $1 million per incident whenever a driver is engaged in a trip. These high coverage levels were adopted before there was reliable data to guide risk assessment. Over time, experience and claims data have shown that the vast majority of rideshare-related claims are resolved well below these limits. In fact, more than 90% of bodily injury claims are resolved or valued for less than $100,000. Despite this, the extraordinarily high coverage limits continue to make rideshare companies prime targets for litigation. Because the company's policy already provides substantial protection for injured parties, adding the rideshare company as a defendant is unnecessary to fully compensate injured parties. It only prolongs the claims process, delays compensation for injured individuals, and increases legal and administrative costs. These inefficiencies also burden courts with unnecessary filings and extend the time it takes to resolve cases. High insurance costs have become one of the most significant cost drivers in the rideshare economy. In many regions, as much as 1/5 of every ride fare goes directly to insurance-related expenses. This translates into higher prices for riders and reduced take-home earnings for drivers. These costs are particularly consequential given that a significant share of rides begin or end in low-income areas, and that a vast majority of rideshare drivers use the platform part-time while balancing other jobs or educational commitments. In order to modernize rideshare insurance requirements while still maintaining strong consumer protections, coverage levels should reflect actual risk exposure. For example, the period of time between when a driver has accepted a ride and has not yet picked up a passenger carries a level of risk much closer to the period when a driver is waiting for a trip request than when actively transporting a passenger. And yet, insurance requirements do not currently reflect that reality. Lowering insurance requirements for the time spent driving to pick up a passenger would be a rational, data-driven step that preserves coverage where it's needed most while reducing unnecessary costs. Clarifying liability rules would codify current law declaring that rideshare companies are not held vicariously liable for the independent actions of drivers when the company has met its legal and contractual obligations. This reform would not limit an individual's right to pursue claims against a rideshare company that fails to uphold its responsibilities. Instead, it would reinforce fairness and efficiency by distinguishing between legitimate corporate liability and situations where existing insurance coverage already provides adequate recourse. Taken together, these reforms represent a balanced approach to modernizing the rideshare regulatory framework. They would promote a sustainable and equitable market, reducing litigation costs, streamlining claims resolution, maintaining strong consumer protections, and ultimately making rides more affordable for riders and more profitable for drivers. As insurance costs continue to rise nationwide, thoughtful updates to rideshare insurance and liability policies are essential to preserve access to safe, affordable transportation options and flexible earning opportunities. We encourage policymakers to pursue data-driven solutions that right-size risk and assure accountability while supporting an efficient, modern, and economically sustainable rideshare system. We aren't seeking a vote on this legislation today, as you know, but we thank you for your consideration and look forward to further discussion. Thank you.
Thank you, Megan. Next, Dan Hinkle.
Thank you, Senator Walker, and thank you, everybody. On New Year's Eve, 2013, Sophia Liu was 6 years old when an Uber driver en route to pick up a passenger struck and killed her. Her mother and brother were sent to the hospital severely injured. Uber's response at the time was, "This is not our problem." The driver wasn't being paid yet, and so this was the driver's problem, not Uber's. This became a national news story, and the public's reaction was clear. That position is outrageous. Insurance companies rightly pointed out that when the driver was engaged in commercial operations, they should have the right to decline that coverage, and the company, Uber, should take responsibility. This is where NCOIL came in. This is why there is an NCOIL model bill on TNC insurance. NCOIL's Model Act was tailored to crafting an insurance framework that became law in 48 states. It is a wildly successful model law that NCOIL passed and is now widely adopted. Uber and Lyft agreed to provide $1 million in coverage when a driver is en route, from when they decide to pick up a rider all the way till they drop off. That was the promise. And now Uber and Lyft are coming to you and asking you to rewrite this wildly successful NCOIL model bill to eliminate that heightened insurance requirement when a driver is en route to a pickup. They want to go back on the promise they made after Sophia Liu was killed. And that's not even the worst part of these amendments. These amendments are a wish list from Uber and Lyft that would completely eliminate their responsibility for how they operate, including their role in sexual assault. That is why we're here, because they are trying to eliminate responsibility for their actions, and they are asking for your help in doing so. First, this bill would eliminate responsibility for building a safe app. Uber's rider and driver app control what information you see, what safety features are or are not made available, how distracting it is for the drivers when they are driving, and when you are aware if a driver is high risk or not. As you can see from the article on your table on page 7, Uber matches rides that it knows are high risk without even giving a warning to the rider. Lyft recently settled a claim brought by Teresa Brooks after she was thrown 44 feet and suffered a skull fracture because Lyft's app was distracting its own driver at the time of the crash. When ride shares launched in cities, you talk about data, we now know that fatality rates go up 3%. It's because gig drivers are all forced to use their phones while they're driving, which we all know increases crashes by over 600%. This has been a problem from the beginning, and Uber and Lyft have both promised that innovation in their product design was the key to making these services safe. By saying that their product is not a product, that innovation stops. They're asking for zero responsibility in their design choices, no matter how dangerous they are. Second, this bill would eliminate their responsibility for the safety representations that they make to riders. Here's the reality. Ride-hail companies don't have to operate the way that they don't have to treat their drivers like agents, but they choose to. They advertise that you are riding with Lyft or you are riding with Uber. They make you pay before you even are introduced to who your driver is. They assign drivers and penalize you for rejecting them. They assign passengers, control driver behavior through penalties and rewards based on acceptance rates, cancellations, surge pricing, and an Uber Pro status. What does the Pro and Uber Pro mean? They dictate who drives, when they drive, where they drive, under what conditions they drive, and they take a cut from every single ride. From the perspective of the rider, you are riding with Uber or you are riding with Lyft, and they are sending an agent to facilitate that transaction. That is intentional. That is their business model. But the moment something goes wrong, this legislation lets them walk away from that responsibility. They can't have it both ways. They can't build brand loyalty by positioning themselves as a safe transportation provider and then walk away when they fail to live up to the promises that they made. The third thing that this bill does is it eliminates their responsibility for their own unreasonable actions. Transportation companies generally owe their passengers an utmost care standard. But these amendments say Uber and Lyft only face liability for gross negligence or criminal wrongdoing. These amendments say that they don't have to take responsibility for their own negligence in hiring, retention, app design, anything else. Ignoring assault patterns, immunity. Covering up reports of sexual assault, immunity. Putting profits over implementing reasonable safety practices, immunity. These provisions make it crystal clear that Uber and Lyft do not want to be responsible, even for their own actions connected to dangerous drivers who are committing sexual assaults. To briefly conclude, the second document you have here It's from House Republicans in Washington, D.C. that recently launched an oversight investigation into Uber because it poses a persistent safety hazard to those who rely on ride sharing for transportation. In this letter to the CEO, they highlight the need for enhanced and expanded safety tools to better prevent sexual assault and misconduct. These legislative amendments are directly aimed at eliminating accountability for Uber and Lyft for sexual assault. We ask that you reject them.
All right, next we have Kara Phillips. Go ahead, Kara.
Yes, good morning. Thank you very much. I'm an attorney here in Atlanta. I have 3 kids, and my practice is limited to representing crime victims in civil cases. So hearing...
So, Kara.
Yes.
I'm assuming Mr. Hinkle is an attorney, and you're an attorney, and I love attorneys. I have a whole family full of them, but please do not be as verbose as Mr. Hinkle. Thank you.
I promise not to, which is what an attorney would do, right? No, the reason that I am here, sir, and all of you, is because I represent crime victims and particularly sex assault survivors. So this article by the New York Times is drawing some important things to the national attention and to your attention as well. I'm also here because as someone who represents sexual assault survivors, many of my clients are silenced through the trauma of what they experience. And they're also silenced through efforts to have them sign NDAs and non-disparagement agreements. And when it comes to corporations such as Uber and Lyft, that is a general practice. So I am sitting here as someone who's able to speak out about the kinds of cases that are coming up just in the past 2 years in my office and who's calling and why. And I wanted to do that this morning in the spot of a lot of mothers, a lot of daughters, a lot of fathers. So just a few of the calls, okay? Just the other day, I had a call of a 15-year-old who was sexually assaulted by a 27-year-old Uber Eats driver while taking a walk. A sexual assault where a driver pulled over and attempted to rape the rider and took her phone and purse. A Uber driver sexually assaulted her in her car. This is the call. Physically assaulted by a rideshare passenger. This is a Savannah case. And that's something I want to point out. I'm a Georgia lawyer. I'm not one of the lawyers mentioned in this New York Times article. I don't go and find multi-district litigation with 1,000 clients. But this is a problem that I'm seeing increasingly. And it's because of the platform. Much like we all understand with the Catholic Church, for example, it created an environment, if unchecked, that would feed on vulnerable people. And that's what we see with ride shares now. If you think back in time, one of the earliest lessons I had was don't get in the car with someone that you don't know. And that is the basis of this entire company. And so the resulting issues that we're seeing are heartbreaking. And I'm speaking to people who are trying to navigate what can be done. So when I got a call about this group coming together here, I was very concerned because what I'm dealing with as a lawyer hearing a call like the ones that I'm getting is taking a look at, was Uber negligent? And it's basically like a dog bite case, right? You can have a dangerous dog and they can hurt somebody. But once they've hurt somebody, then you know that they're a danger. And that's what we're dealing with these drivers. And so when it comes to direct action against Uber, it's important that these vulnerable people in these cars have an opportunity to hold Uber accountable if they know about things and don't protect, don't warn, and don't use their power for good. The other one that I just want to briefly talk about is in the products area. And that's because, like we're seeing with AI and every other new innovative thing on the market, products is a route that has historically regulated through the civil jury system whether something is being done safe. And that's because if you are killed or your loved one is killed in a rollover car crash and Ford Motor Company decides not to spend $100 on fixing their cars, then you don't care if there were other people who didn't get killed. You care that somebody made that profit over people choice, resulting in your loved one no longer being with you by no fault of their own. So I just want to bring that up because this issue is very much building. The momentum of it is building, and it's because of choices that are being made sometimes, and that's where the civil jury system provides an opportunity for real ordinary people to let real ordinary people decide if a big corporation has chosen making money over taking care of them. And just lastly, I would very much have rather had one of the people that I know who is currently involved in litigation with Uber sit here. I don't represent them, but they were available to come. But in light of the time constraints here, you're not able to hear from them. But in that case, this young 14-year-old girl was picked up by an Uber driver at 1:40 in the morning in order to be trafficked a distance away from her home to a grown man who had convinced her to come and over the course of 3 days, raped her repeatedly. And so I just want to say that these are real things that happen to real people. And I asked them to just send me a picture of their daughter. And I can't share it with you, but I took a look at it, and I have a 7-year-old daughter. You know, that's why I'm here. Thank you.
I sure wish Representative Bennett was here. And I know you all do too.
No,
He's much smoother. Thank you, Kara. Brad, now.
Thank you, Mr. Chairman. Just as a reminder that we're not expecting a vote on this today. We knew that this would be a topic that needs some discussion, and our hope is that through this discussion with the committee and with other stakeholders that we can get to a set of amendments that everyone is comfortable with and maybe vote on in the spring meeting. I would like to go, I know we have time issues here, so I'm going to try to be succinct. I'd like to go through and rebut some of Mr. Hinkle's points, but I'll try to just do so in the context of talking about the actual language that's proposed. I do want to first say that without reservation, safety is a core value at Uber, and we've invested billions of dollars and countless hours to reduce safety incidents during trips, particularly when it comes to sexual misconduct and assault. This is an enormous challenge. It is not limited to Uber. It is societal. More than half of women in the US have experienced sexual violence in their lifetimes, and Uber is not immune to this problem, but I believe that Uber has done and is doing more than any other company to try to confront it. We make public tremendous amounts of information and data on this. I would invite you all, in the interest of time, to look at uber.com/safety and other resources that we make public on that. So getting back to the language of the bill, you know, the proposed changes themselves, there are a couple of minor and more technical changes that are proposed, but in the interest of time, I'll focus on the major ones. The first is the clarification that the TNC app is not a product in the definition of digital network. Now, traditionally, our product liability laws, both through statute and case law, have only treated physical, tangible items as products for the purpose of product liability. So we think about consumer goods, we think about machinery, we think about appliances. To treat a mobile application as a product would be a change in the law, but that is what we're seeing in some pleadings, in some instances in litigation. So the logical reasoning behind trying to attach product liability to the mobile app is that strict liability then applies, right? And then the plaintiffs would not have to prove actual negligence on the part of the TNC to succeed in its claim. We think the logical approach is to reaffirm in statute that a mobile app is not a product under this paradigm. That's all we're asking for there. Next up in section C is a reworking of how we define the periods of operation of a TNC driver and changing the limits that apply specifically to period 2. Here, we borrowed language from North Dakota. I know Senator Klein helped work on that, and we think it clearly and simply defines the periods of operation. And then we pair the period 2 limit requirement with the period 1 limit requirement of $5,125 instead of the period 3 limit requirement of $1 million. The discussion around this really started, if you remember, a couple of years ago when we passed the delivery network company model, the DNC model. We realized that the risk profile for period 2 is really, really close to, almost identical to the risk profile of the DNC operation, so we thought it would make sense to have those limits pair up. Third area is the addition of the new section F at the end that lays out a test for employee versus independent contractor. This language is borrowed substantially from California law, but also there are some other states that have put a specific TNC test in there, and we think this is the best approach instead of something like an ABC test. And then finally, the new section G addresses vicarious liability. Now, this is the key point. Mr. Hinkle spent a lot of time talking about this, and I just want to make clear that what our goal is in this language. There are innumerable cases where the only allegation in the lawsuit is that the TNC driver was negligently operated his or her vehicle, but they also name the TNC simply because the ride was booked through our app. The negligence of the driver is covered under the $1 million policy, so there's no lack of available insurance. Those are the only claims we are trying to address here. We're just trying to address claims where the TNC has been named by virtue of operating the app, but the only allegation is that the driver was negligent, and they're trying to impute that negligence to the TNC. We don't think that's appropriate, and that's what we're trying to address. We're not trying to address any situation where the TNC was actually negligent in its own right, where we failed to conduct a background check, where we failed to act upon some information that we needed. If we need to continue working on the language to make that clear, then we're happy to work with y'all to get it right. But I just want everyone to understand that is the intent behind that section. So I know we're running out of time here. I can conclude there, and thank you, Mr. Chair.
Thank you very much. I will open it up to Representative. I'm going to have just a few legislator questions or comments, and then we're going to move on to the next topic. But Representative Lehman.
Thank you. And being a part of this initial discussion years ago, the issue was period 2. So I'm going to focus on that because period 2 is the issue. Because period 2 is when the insurance industry says, we're not going to go up there, and Uber said, we're not going to go down there, and you ended up with this gap. Because nobody would go in either direction. Legislation was passed in 49 states that said, somebody's got to fill the gap. It's going to fall to you, Uber. And the industry can do it, and they haven't. I wish they would, but they haven't. So the point is, in this area 2 where you want to lower the limit, my concern is this. You equate it a little bit to the DNC, and the argument is, well, you got a sandwich in the back of my truck or car versus a human. But I'm talking about the human in the walkway. The driver driving the sandwich can hit that person as easy as a person driving with a human being. That period 2, to me, is still a big issue because I don't think we want to go down to a state minimum limit in that space because the industry is not going to be there to fill that gap. And this, as we go forward on this, I think that's the issue we got to focus on. The rest of the stuff you have, a lot of it I support, but I think we got to get around that issue of that period 2.
Can I respond?
You want to comment on
Yeah,
that?
just thank you, Representative Lehman, for speaking to me a few weeks ago about it. I know where you stand on this. I would characterize it differently, that the most important piece when we were first doing this was really the period 1, not the period 2, that, figuring out when they just have the app on was the more controversial piece.
You're right about that because the industry wanted to say no when an app was simply on.
Yeah.
I think we got that taken care of.
Yeah.
That's fine. Now it's the area 2 that we're still having we're going to still have a gap if we do this.
And I would just say that, like all the models, when it comes, if it were modified to change the limits in period 2, within your states, folks are free to put the limits in place that you think are appropriate. I know Representative Lehman, when the DNC model came into Indiana, wanted higher limits than were on there, and that's where we ended up. So we perfectly understand them.
Can I
Mr.
just,
Hinkle? Yes, sir.
yeah, just to provide context for the stage one for the people who haven't been following this as closely as obviously those who've been involved with it since the beginning. The question was always, if I pull up the Uber app and I say that I'm going to pick up a ride, but I'm not actually going to do it, I'm just driving around with the app on, there was a controversy as to who should provide the insurance during that period. And that is how the sort of stage one was created in order to address that, right? Exactly. And so, but there's never, I mean, since the nationwide controversy over Sophia Liu, nobody has really been advocating to distinguish between stage 2 and stage 3.
Okay, we got a question from Representative Ricks.
Yes, and thank you, Mr. Chair. I just wanted to add to this discussion. In Colorado, we had a sexual assault bill for more safety and expanded and enhanced safety tools in Colorado. One of our lawmakers was actually sexually assaulted in an Uber. And so there is ongoing, of course, litigation with that. The bill didn't pass in Colorado, but I really want to say that NCOIL should look at any amendments that will limit liability for sexual assault or any of their responsibility. There are too many women that are being sexually assaulted and passengers, and these are our constituents, and we have a duty to ensure that they're taken care of if they are sexually assaulted in Uber, Lyft, or any of the ride shares.
Megan?
If I may, just,
Yes.
quickly to reiterate, like, safety is the utmost importance to us, and we're always looking to look forward to new safety features that we can have to make the platform as safe as possible. But to reiterate, like, our intention is to limit this bill to actions that would be covered by auto insurance and auto insurance only, not anything related to sexual assault. Always willing to have conversations around that. Sexual assault is obviously an issue that is not tolerated on our platform in any way, shape, or form. But just to be clear, our goal with this legislation around vicarious liability is for auto accidents only. And so happy to work to make sure that that is very clear within the language.
All right, thank you, Megan. I don't see any other questions. And again, we weren't going to take action on any of this today, but very robust, good discussion. Thank you to the presenters and panelists for sharing that information with us. All right, is this the?
Yeah, so we're going to have to.
Okay, stand by just a second. Okay, we, because it's time to readopt the model, but we weren't gonna, vote on these amendments today. But I would ask that somebody make a motion to readopt the model until our next meeting, which is in April. So this is not a readoption for the full 5 years. It's just readopted until our April meeting. Do I hear a motion?
So moved.
I have a motion. Do I have a second? Any further discussion? All in favor, say aye. Opposed? No. Opposed? Anybody? All right. Thank you. It's readopted until April. All right. The next, and I think maybe it's the last item on the agenda today,
Storm chaser.
is something near and dear to my heart, is the NCOIL Storm Chaser Consumer Protection Model Act. And I will tell you the history of this as far as with me and us and Chairman Lumsden, the House Insurance Chair in Georgia. He's here with us. But we had, and it was national news, so we had Hurricane Helene come through Georgia a little over a year ago. And it was an unprecedented natural disaster, a storm like we had never experienced before in Georgia, with a swath of devastation that was just unbelievable. Many communities really looked like there had been a, nuclear bomb gone off in the community, and it was terrible. And because of the widespread devastation and people in desperate situations, unfortunately, you had unscrupulous people come in and try to take advantage of their desperation and exploit them at their time of most need, and rushing people into signing contracts and assigning benefits and making deposits and then not following through with the work or not following through with quality work. In the state of Georgia, we had a pretty good statute already on the books with regard to fraudulent activity surrounding roofing, but it was really just narrowed to roofing, and we took that and we expanded that to cover all types of construction activity after, the bill we passed in Georgia was after a natural disaster, to give some consumer protection. And so NCOIL has a model bill already regarding roofing, which is similar to what we had in Georgia. And
Mr. Chairman.
Yes.
Might I say that we have 17 minutes before our executive committee meeting, and some people have to travel back. So could we speed it up a little bit?
Yeah, yes, sir, Mr. Chairman. Good point. Anyway, so we've got some amendments to the existing NCOIL model regarding roofing to give broader consumer protection to our constituents. So with that, let me see, I'll introduce the panelists. So we have Brent Walker. Go ahead, Brent, tell us who you are. And I guess we got to be brief.
Yes, sir. Thank you, Mr. Chair, Senator. I just want to commend you guys on what you did in Georgia around the consumer protection. And I'll kind of frame the request and the proposed amendments pretty briefly. What we did in July was readopt the model with the understanding that we would have proposed amendments. Since then, and pursuant to Representative Bennett's instructions, we've done our homework. We've spoken with the roofing contractors, we've spoken with the restoration industry and our anti-fraud stakeholders and industry stakeholders. The amendments that we've agreed upon, we've reached consensus around it, and we do just what you mentioned. We not only expand the consumer protection in the existing model, but we modernize it and bring it closer to what happens in the real world of restoration and property repair after a storm. So we are asking to expand the definition of contractor, not only to roofers, but all contractors post-disaster, prohibit AOBs, and there's drafting notes around the emergency services as a carve-out and an exception, so that we don't slow down the property damage mitigation post-storm. I'll keep my comments brief for now. Happy to answer questions, but for the interest of time, I will pass the microphone.
All right, so next we have Kyle McCollum with the National Insurance Crime Bureau. Kyle.
Thank you. Thank you, Chairman Walker, and thank you to the committee for taking up this important model act and the amendments today. As you know, the National Insurance Crime Bureau sits at the intersection of the industry and law enforcement, and we've seen over the years that fraud is committed by more than just unscrupulous contractors in the roofing industry. We see it across the board, as Chairman Walker has mentioned. And I use the term unscrupulous contractors a lot, but I think that almost gives them too much credit. These are just good old-fashioned fraudsters that are masquerading as contractors. So I think what we're doing today is a great step forward, and I just really appreciate the partnership with my colleague Vince here at the table from the Restoration Industry Association, Brent's leadership at the Coalition Against Insurance Fraud, and the great work that we did with all the stakeholders on this, and your leadership, Chairman Walker, in moving this forward. So thank you all.
All right, and next we have Vince Scarfo from the where's that at? The Restoration Industry. Correct me, Mr. Vince, the name of your association.
Restoration Industry Association. Good afternoon, everyone. I am a chief operating officer of an independent restoration company near Annapolis, Maryland. I am a volunteer to the Restoration Industry Association, and I chair their legislative task force, and this is the first time ever we've done anything like this. I appreciate the opportunity to be before you. Restoration Industry Association is an 80-year-old association. but advocacy is kind of new to us. We've been working on many other things for the last 80 years. We are the group that arrives in North America immediately after an emergency takes place. It's our teams and groups that immediately follow a fire, flood, storm, and other disasters, protecting lives, stabilizing structures, and helping families and businesses return back to normalcy. I am very proud to tell you that earlier this year, we took a step. Every 5 years, the Office of Management and Budget will hear petitions for a new NASAC code. We applied for a new NASAC code this year for our trade association because we're trying to do exactly what you all are trying to do, ensure that it's only professionals that show up at your door when an emergency takes place. So I thank you for having me, and I'm happy to answer any questions I can.
All right, well done. So again, this is amendments to an existing model act that NCOIL has, and that was sent out in your 30-day material. In the recent days, we've met with these three gentlemen and the representatives from the insurance industry too, and taken all comments and considerations there and made some adjustments. And specifically what we've agreed to do is rescind section, you can find this in your book on page 263. So I'm going to turn to my page 263. And some of the concerns that we heard and thought were valid that we decided to take into account is to remove section 4C that would have compelled an itemized statement of repairs ahead of the work being done after a natural disaster. We felt like that was not real practical and would slow down the emergency repair process, and it did not really add, we didn't think, a whole lot to consumer protection or really anything, and it just really wasn't practical. We clarified section 6 to ensure that emergency services and a work authorization are paid for at their reasonable value, which was already really provided in the summary of the Model Act. We added a drafting note to ensure that emergency services are not impeded by this Model Act. It should serve to protect consumers in the industry against fraudulent contractors, not impede legitimate emergency services in the wake of a disaster. And finally, we clarified that the Model Act applies to both resident and non-resident contractors. In a case like Hurricane Helene, we needed all hands on deck. Non-resident contractors were needed to take care of the massive devastation we had. So we've made it clear that it applies to both resident and non-resident contractors. Again, we've spoken with everybody in the industry, and we've had no pushback, and we have unanimity that we think this is both good for the consumer, good for the insurance industry, and good for the contractors that do the important work. And so I'm hoping today that we can adopt the proposed amendment to the existing NCOIL Model Act. I will open it up for questions or comments from legislators. Okay, seeing none, do I have a motion to approve the amendments? Have a motion? Do I have a second? Any further questions or discussion? All right, all of those in favor signify by saying aye. Aye. Any opposed, same sign. All right, well, thank you all very much. It passed.
Now we need to readopt the amended model.
And now, so parliamentary-wise, we need to have a motion to readopt the model as amended.
Right. I've got one right here.
Thank you very much. Second, all right, any further discussion? All those in favor signify by saying aye. Aye. Opposed, no? No. All right, the model is readopted. Very good. Do we have any other work? Okay.
Information one, there's no discussion for that, it was just a mistake. Do you have anything on that?
I don't, this is another.
No.
I think we've got one more, all right, one more model to readopt.
Yes. It should be this one right here.
All right, and this is the Model Act regarding the use of credit information in personal insurance. It's found in your binder, page 245. It does not advocate for the use of credit information in underwriting one way or the other, so it's neutral on that. There's been no pushback or questions or really controversy on this model. It's time to readopt it. I will accept a motion to readopt the model. All right. Any further discussion or questions? All right. All those in favor signify by saying aye. Aye. Opposed, no? All right, one no. Thank you very much. So that model is readopted. Is there any other business to come before the committee?
Pam's got business.
All right, Assemblywoman Hunter.
Yes, thank you, Mr. Chairman. Just very quickly, I want to say that it was very unfortunate that the Aerial Image Model Act was not adopted during our interim meeting last month, and I really feel this model is a pro-consumer measure, and we should not let the issue go away. I think we can certainly make some changes to it and address some outstanding concerns, but it's something that is certainly going to be introduced in states either way, so NCOIL should definitely not let the opportunity pass to provide guidance on this issue. I've already introduced the model with the amendment in New York. I'm certainly willing and wanting to support working on the model again early next year to get things right and hopefully move it forward to adoption. Thank you.
Thank you, Assemblywoman Hunter. I couldn't agree more, and I think we will have legislation before the Georgia General Assembly in January on aerial imagery also, so I hope NCOIL will continue to work on that. All right, any further business? Seeing none, I need a motion to adjourn. Motion. A second. All in favor signify by saying aye. Thank you all for bearing with me. Thank you.